Welcome, everyone. My guests today are both from the National Association of Mortgage Brokers, Valerie Saunders, who is their newly named executive director, and their president, Jim Nabors, to talk about issues facing their members, market share, and their new report on TPO. Jim, Valerie, welcome to HousingWire Daily.
Hello.
Hello.
Great to have you guys on. Really interested in your perspective. So one of the reasons we wanted to do this podcast is you guys are celebrating 50 years of the National Association of Mortgage Brokers. So that's a pretty big deal. And I would love to have you talk about maybe some of the things that you see right now that are challenging for mortgage brokers in this specific environment, and also how you're helping them to meet those challenges.
I guess I'll start. We're working, NAMB is centered around a few different areas. One is regulatory and legislative issues, advocacy, as you said, and the issues that are affecting mortgage brokers. The biggest one that seems to be concerning 90% of mortgage brokers is the trigger leads. And we've been working on this for 3 or 4 years and have finally think we're coming to the end of the road, and we'll be seeing, some success for the entire industry shortly after the election. It's tight, Senator Reid is heading it up, and with the support of every mortgage-related group. And we're really kind of excited about it. And so that's, so regulatory issues, that we're always affected by people that could either legislate you or regulate you out of business. It's always been an issue. It was the number one issue that people originally joined NAMB. But now there are so many other benefits, education and certification classes at our convention in Vegas that just ended. We held certification classes in VA as well as FHA, and they were hugely popular, as well as for the people that hadn't got in there, their continuing education is required by the NMLS. We also offered that, along with everything else that goes along with, our normal convention. So those are the, the major education. And then technology is the future. And I've been doing this since '76 when the fax machine hadn't been invented. And so many things have been done since then. And we're very lucky because Valerie knows how to do all that stuff. But that comes in so handy when somebody asks you about something and it's like, yeah, let me get back to you. Call Valerie.
Yeah.
So
Valerie, maybe you could jump in here and tell us what you guys are looking at as far as tech and where you think the future is going there.
As far as technology goes, what we've really tried to do over the past year, and will continue to do into the future, is add as many industry partners, strategic sponsors, benefit providers as we can. Being a small business owner myself, I know that administrative expenses and trying to keep costs down in this sort of interesting climate is at the forefront. So we have done a lot to add different technology providers that offer either monthly discounts or annual discounts or waive setup fees, so that our members and future members can have as many opportunities as possible to be able to try to take care of these things themselves. Being a small mortgage broker business owner, I do not have a marketing department, a social media department. I am all of those things. So I need to be able to try to stay on top of as many things as possible, and be able to try as many things as possible, but not have them be so exorbitant in their costs that I just can't do them. So we try to seek out those different providers that will be able to provide cost-saving measures to our members. The other big thing that I think we are all looking at is AI. At this past conference, we had a 2-hour AI workshop. I know it was standing room only. People of all ages trying to figure out what does it mean for the mortgage industry? And what can I do to use it to help me grow my business? Jim mentioned advocacy. From an advocacy perspective, I think it is going to create some real challenges from on the regulatory side, because when you have software that can talk and make it look like a person, and it's not really that person, that's a little unnerving. And we have a lot of our borrowers don't want to come into an office. They want to communicate virtually. And how do we make sure that we have rules and regulations and requirements in place so that the consumer is actually communicating with a licensed mortgage professional and they're getting that quality of care that they expect, speaking with somebody that has gone through all of the education, testing, et cetera, to be able to provide consumer protection. So I think, that's kind of where we're at.
This is such a big topic, obviously. We had an AI summit this summer just because, there is so much interest in it. And then, to your point, we just published a story about a CloudVerga survey that showed that Gen Z and millennials, they, 60% are like, they want a fast, efficient process, but they are skeptical of if AI is too much in the process. And I think that mirrors what most people feel is like, great, this could make it better, but I still need a person to hold my hand. I still want that mortgage professional in the loop, which is great news for our industry, right? It's like, yes, this technology is meant to make you more efficient, but it's not meant to take the place of what you do.
Yeah, I think the fear is that as fast as we are trying to stay with the pace of technology, fraudsters are out there figuring out ways to outpace technology and to make it more difficult for people who are trying to do the right thing. So it's a little scary. You mentioned and I see your AI summit behind you. Jim and I were at a regulatory conference for ARMOR, the American Association of Residential Mortgage Regulators, and there was discussion there about what types of rules and regulations need to be put in place in state lending laws so that we aren't on the defense, we're on the offense when we're dealing with AI and consumers. So,
Yeah.
Jim, did you want to weigh in there as well?
Well, when you mentioned that people, no matter what generation they are, when it comes to borrowing money, and particularly buying a house or refinancing, they really want to deal with someone that knows what they're doing and feel that they're getting the best advice they can. And I would say personally, it's one of the few times my son actually talks to me and just doesn't want to communicate by text. And because it is, the largest single purchase most Americans are ever going to make is their home. And by dealing with people that have experience and taking advantage of all the technology that we have, and the phone, the mobile phone has the smartphone has changed how we operate our business. But still, people do there are times people still want to, they'll, whether it's Zoom or whether they want to meet you face to face, and they really want that, and that's what we emphasize. It's just not answering the phone. It's just not replying to emails and taking applications over your website. It's actually getting involved with people and understanding them and being able to, by understanding what their true needs are, coming up with what's the best solution for them. I mean, many times we have people that will call us and say, oh, okay, I got this, this, and this, and this. It's like, great. Now, what do you want to do with this, 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 and this? And how do we better utilize it? And in some cases, it's like, you want to put, just on a purchase, I want to put 40% down. Great. And what are you buying? And, they'll go off. I'm buying a 4-bedroom home, yada, yada, yada. And it's like, well, what do you live in now? 1 bedroom. Do you plan this on furnishing the new home?
Right.
Oh, yeah, but I'll worry about that later. Well, why don't you put a little less money down and furnish it now? Because what happens traditionally is, and Valerie can agree, as soon as they buy a new house, they're going to furnish it. And they're going to go to their credit cards. They're going to go to wherever, furniture store that has extended financing where they would have at 20%, where they would have been better off just putting down a smaller down payment and using that money to actually take care of everything they really need.
I think that mix is really important right now because affordability is stretched for a lot of people, right? I did a podcast yesterday that was like talking about how mortgage rates, although mortgage rates have gone up, home prices have not come down, right? We would maybe expect that, but actually we have high home prices and high mortgage rates. I mean, relatively high, right? So, I think that affordability piece and the figuring out how it can work for each person is something that cannot be, at this point, outsourced to AI. AI can help. AI can be like, here's all the programs that you guys offer, that here's all the terms or whatever. But it's that real face to face and I think personal touch that I think mortgage brokers are characterized by.
Yeah, I think anyone that's looking for a 3.25 or 3.5% interest rate, that's never going to happen.
Right.
Even when interest rates were at 18.5%, prices of houses were increasing and people were still buying houses. Now, they weren't costing $400,000. They might cost $70,000 and they jumped to $90,000. So, and followed by the greatest refi boom that we've ever had. I guess second to when mortgage rates dropped to between 2.25 and 3.25, which is the problem now because people that have that rate, they're not going to give that up. And, senior citizens aren't looking to downgrade so that younger people, millennials, can get into the house. So, yes, there is a problem. We need, I think they say 10 million units a year to meet the demand for the millennial generation. So, yeah, we're going to have a really need for more building. It's just not, and more rehabbing of those that are existing and that have just been sitting vacant. But it's getting those people to realize, okay, I'm not going to have a house as nice as what my parents had to start. They're 30 years in, their parents have 30 years in the building this house. You're going to have to maybe step back and cut back, but that'll get them in the market. And then from there, then they'll grow. So, and we're seeing a lot of that too. It's all about the inventory. So.
It is. No, and it's all about the local inventory, right? So we have those national numbers and they show that, inventory has increased a little bit over last year. That's great. That was the lowest inventory we've ever had. And if you consider that 40% of that inventory is in Florida and Texas, it looks a little different when you take that out of the equation. So I know you just wrapped up your annual event and you talked about that a little bit. Valerie, maybe tell us some of the highlights of that and what you guys, what you guys found and what you're focused on.
Sure. Well, first of all, I think we probably had the largest registration and attendance numbers that we've had probably since the market crash in 2008. So what that tells me is that there is hope, there is desire, and this is still a great profession to be a part of. As far as some of the highlights, we had a lot of great speakers. Of course, we had Barry Habib was our keynote on Saturday. We're very happy that Barry is on the road to recovery. He was also part of the band that we had Sunday night at our end of event party. So we all are used to seeing Barry on stage talking about interest rates and the economics of it all, but to see Barry on stage, singing Journey or
I would have loved to see that. That's great.
Well, come next year because he's going to be there in 2025. But it was, number one, it was wonderful to see him just enjoying life, and being on stage singing with his friends was definitely that was in his element. But we also had a lot of other great speakers. We had a wonderful battle of the coaches that was put together by Chris Vinson and Windsor Mortgage. We had a broker panel that was put together by Freedom Mortgage. We had Neil Dingra. We had a wonderful DEI panel. We had a DEI committee this year that was very committed and focused to that movement. And so we had 5 members of that committee that were there for a panel that was moderated by Nora Guerra, who's now moved on to bigger and better things. We did introduce our homebuyer report with data that was provided to us by Freddie Mac, and we took that data and then analyzed it and put it in a report that is available to the masses. It is the very first TPO focused homebuyer report that Freddie Mac has been a part of. It is available on our website as well.
Let's talk a little bit about that report. Let's dive into that a little bit. What were some of the insights that you feel like were really brought to the fore in that report?
From a TPO perspective, I think it's interesting that both on the purchase and the refinance side, there was basically stability from 2018 all the way to 2023. So although I think the industry thinks that there's been this massive drop off, after the post-pandemic, that really hasn't happened. When you're looking to the numbers in comparison to the retail origination side. So our market share has been relatively consistent over the last 5 years. And so to me, that shows that consumers still see a value in utilizing the mortgage broker and TPO channel. And that hasn't changed regardless of what other things are happening in the world, whether that is increased interest rates or a pandemic. So I think that's very positive. It does have a lot of other demographic type data in it as far as whether based off of ethnicity or age or place in life where people are gravitating to. And it's pretty much, where you would assume the West Coast, Florida, Texas, those things don't really change from year to year. But, it's interesting to just kind of see the migration patterns. And, when the pandemic happened, it was like, oh, everybody's leaving California and they're moving to Idaho and Montana, and everybody's leaving New York and they're moving to Florida. Those things are knee-jerk reactions to, reality. But it is a very comprehensive report. It's 56 pages long. It was a lot of work. and I hope people check it out.
Yeah, no, I'm excited to look at that and learn more about it. Jim and Valerie, as we look, we're less than 2 weeks away from the election. You mentioned that the regulatory regime is one of the things that you guys keep an eye on, as everyone does in the mortgage business, right? Because it can make such a big difference. What do you feel like? How are you guys prepared, or how are your members prepared for whatever happens in the election? Because I don't think anyone at this point could say for sure which way we're leaning, which is so unusual, right? I mean, it used to be in the past you could see, oh, this person's leading the polls a lot, this person isn't. It seems like a dead heat in many ways. So, how do you, as an association, get your members ready for whatever's coming?
Well, because we've been through this so many times in the last 50 years. At our national convention, we had our chief lobbyist was there to give us a breakdown on how things are going. And it was kind of interesting to hear that we really don't know. He adds some on the presidential side. It's his belief that the Senate will go Republican and the House will go Democratic. And so just the opposite of what it is. But we've been bipartisan, forever. Our political action committee, we're just looking for people that are interested in working with the mortgage brokers and working with the mortgage originators. So we're prepared a little, whatever happens, we're going to hit the ground running in January. But in November and December, when Congress comes back to work, we're all going to be all hands on board to see what we can get pushed through in this session, the rest of the session, no matter what the issue, whether it's, as you mentioned, Trigger Leads bill or whether it's the Gold Star Family bill. And at the same time, we are working with VA is interested in a HECM for veterans over the age of 62. And, but that will have to wait till the new administration. But, so we're already laying the groundworks on what we want to accomplish regulatorily and legislatively. So, and with our new, I don't think, we can't mention enough, and I hope we have time to, Valerie, who was the president and is now, as of October, our chief executive strategist. And so, so we have some continuation there. And at the same time, Rocky Andrews, who's been in NAMB for 30 years, has become our chief financial officer. So we're going to have more continuity than as the board flips. And we saw a lot of interest at this convention in new, younger people who might have been with another association or are just brand new to the mortgage business that want to get involved. And we've been recruiting to all our committees, have seen just a tremendous increase in numbers, particularly in technology, but also in communications. But everybody at NAMB automatically is on the government affairs committee. And that's always been our biggest committee because everybody wants to know, what's the government going to do to me today? And so we've worked very hard on that. So I think we're going to be positioned to be in a good spot as soon as we figure out who the president is, who the Speaker of the House is, and who the majority leader of the Senate is. And by the way, it also will help us to know who's chairman of the Senate Banking Committee and the House Financial Institutions Committee, because we've had good working relations with both McHenry in the House and Sherrod Brown, who's my state senator, and before that was my congressman forever. So we feel we're going to be good either way.
Well, and there's so much work that happens between the election and inauguration for advocacy organizations like yourselves, where it's like, establishing, even in this case, even if Harris won, it's not a Biden administration. So like there's change either way, whatever happens. And then you guys have to scramble to figure all these things out and get there. But I do agree with you that we feel like housing really is a bipartisan issue. Maybe, of course, some of the ways that people want to approach it are different, but encouraged that we can get some things through no matter what. But Valerie, Jim, thank you so much for being on. Thanks for joining us as you guys hit 50 years, celebrating the advocacy that you guys do and representing the mortgage brokers like you do. I really appreciate it.
Well, thanks for having us.
Thank you.